So yeah, just so y'all know my background, I've been in insurance since like mid 2014, opened my own agency in 2015, early 2015. Spent the first 5 years of my career as a captive multi-line agent at American National Insurance. We did home, auto, life. And for 5 consecutive years, I was top one, top two life and annuity producers nationwide. Um, I just found some success with that. I ended up going independent, mostly because I wanted to focus on the life stuff, not the property casualty at the time. And so I went independent and focused on life. But I will tell you, I was on a podcast yesterday with a gentleman, and he asked, what's your marketing plan now that you don't do home and auto stuff or commercial insurance? And I told him, my number one, I've stood by this. Kenzie's known me for years now, too. I've stood by this from day one. It's a program I call Once Your Client, Always Your Client. My number one seller for life insurance and annuities, and I do a lot of IUL and annuities, like millions per year in premium, to give you an idea, and shooting for 10 million this year on annuity premium. So we'll see. But it's partnering with property casualty agencies that don't want to sell it themselves. We'll go partner up with them. We'll cross-sell their book and give them some revenue share. So I certainly love that. But at the same time, I really feel like it behooves a quality property casualty agency to add life insurance and annuities, IUL and annuities specifically. I think term's a great one. I know today's supposed to be IUL. I'm going to touch real briefly on term, because one of the best ways for you to sell more IUL, or if you're a whole life person, do whole life. That's okay. But one of the best ways to sell more cash value life insurance is to sell a lot more term. To sell a lot more term first. It gets the conversation going easier, smoother. Your pipeline's paying you instead of you paying for your pipeline. And it's just a more profitable, easy transition out of P&C and into life insurance. So let's dive into some things here. So why would P&C agents even want to go down this road? Okay, number one, there's significant financial opportunity there, the commission, right? The reinvestment of those additional commissions back into your agency. Think to yourselves, I know we're screen sharing here, so I can't really see all y'all, but maybe raise your hand, put them in the air like you just don't care because I can't see you. If life's getting a little bit crazy right now, especially in the personal lines markets, how much would it help to have additional budget to either buy more leads, have more callers, have more opportunity to close, whatever the case may be? Would having more marketing and operating budget without having to chase more leads or anything first, would that be helpful? And the answer is unequivocally yes. Okay. You're going to end up taking better care of your clients' wants and needs. Because of that, they tend to stick around. Okay. IUL and annuities. It's trendy right now. It's trendy. So you see a lot of agents wanting to get in on the trend. Company trips are shifting to weighting based on these products. There's a lot of your captive companies right now specifically, but even your independent companies, they quit offering trips like going to Scotland or Dubai or whatever, Cabo. They quit offering those based on annuity production back in 2016 when the Department of Labor came out and said, hey, we think we're going to try and make annuities, fixed indexed annuities, a securities registered product. Well, that all got pushed back, and we call that the fiduciary standard. There's been some re-implementation of it, but you don't have to be securities licensed for fixed indexed and fixed annuities. And because that's all kind of settled now, these companies are now putting you back out on trips and paying bonuses on annuities again, where before they didn't, because they didn't want to get their hands slapped. So that's another reason a lot of agents want to. You do get increased persistency on your primary P&C book. There's been study after study after study. The more lines you have, the more likely they are to stay. And I'm here to tell you, when you have life insurance lines, life or annuity lines, they are even more likely to stay than if you had just an extra umbrella or something like that. Okay. So you don't have to go replace as many people who just leave your book, through atrophy because of rates or whatever, because you have some of these more indemnifying lines with them. You get increased profitability on your primary book through umbrellas. I sell more umbrellas than most P&C insurance agents. Now, do I sell them? No. I refer back to the agents I'm working with. But as part of the process I'm going to show you here, we end up doing a discovery that's in depth. We end up finding more lines of business for you to insure. Like we end up, they're not telling you about the boat because it sits there 9 months out of the year. So they didn't tell you about it. We find the boat and now you get it on the insurance. And maybe it's just endorsed on the home policy because it's parked there, or maybe you get a boat policy while you're there because it's just not that expensive, right? We sell a ton of umbrellas, those underlying coverages, and additional items. So your primary book is going to increase in value if you'll do for your own book what I'm doing for folks' books. Okay. Anyone feel like unmuting themselves? Is there any other reasons that we missed that you really want to get into IULs and annuities? Yay, nay? Okay. We won't sit here too awkward for too long. We're just going to keep rolling. So where do you start? First, I've got a few things I got to hit. Call it compliance or whatever. You need to go learn your products, become duly licensed, and fulfill some other requirements. So what are those requirements? Okay, first of all, you do need a life insurance license. And not only that, you're going to need a license or reciprocal license for any state you're going to sell in. Now, that shouldn't be news to y'all, but you do need to have both those licenses. If you're in Texas and your client's in Arkansas, you need your Texas resident and your Arkansas non-resident. I recommend Circon.com. It's a Veritafor product or Veritafor website, but Circon.com. It's free. Sign up a Producer's Edge account. Now you can track and manage all those licenses and even your CE credits. Okay. Secondly, once you're licensed, you need to do the product training. If you're independent, you may have multiple products and multiple carriers. You can't just do IUL with one carrier and expect the other carriers to allow you. Most carriers now have what's called an IUL certification course that you're going to have to take to become IUL certified. And once you're IUL certified, you're usually good to go unless they close a product down and then reopen a new one, in which case now you need to do the product training again. On the annuity side, with every carrier, typically you're going to have to do a training on every product. So they might have, 3 different types of annuities. You might need to do 3 separate product trainings. You don't need to do them all at once. You just need to do the one that you're interested or going to sell. But if you don't have that done before you take the application, you're going to have to go back to your client, tell them you screwed up, and you need to redo the application. And that kind of shakes some consumer confidence. And then the one other thing as far as other requirements goes is there are some annuities, we're going to talk about this in just a minute, that have some true long-term care provisions in them. When they have that, you have to be long-term care endorsed or long-term care certified. The best way to do that is through CE credits. Okay, so go take some CE courses, Web CE, Exam FX, whatever. Usually, if I remember right, I think the LTC, long-term care suitability course, is like an 8 or a 12-hour credit course. Last time I did it was a couple years ago, and several years ago, I guess, and took me a couple hours. Was all in. I think it's every 2 years, or depending on the state, you may have to do a refresher course. Those are usually pretty simple, pretty easy. Okay, but it does count towards your overall CE. But you need that in place if you're doing an annuity with some long-term care stuff on it. And we'll talk about that a little more in just a minute. So make sure you have that stuff done and knocked out. Now you're ready to sell IUL and annuity. You need to begin planning and shifting your agency culture to provide for financial services, not just insurance. Okay. When we go to folks, I'm telling you, nobody wakes up in the dead of night saying, or I can't say nobody, all general sweeping or sweeping generalizations are untrue, including this one, right? It's the old adage. But most folks don't wake up in the dead of night saying, my goodness gracious, I want to buy an IUL. They just don't. Okay. So to brand your agency as, hey, we are just an insurance agency, it is more difficult to brand yourself as more of a firm. And our firm includes a financial services side, not financial planning, financial services like life insurance, annuities, and other related products. Okay. The wording is important. So we are a firm that has an insurance side and a financial services side. And then you're going to want to start insulating and dedicating yourself or someone else in your firm in order to have maximum results. Now, does that mean you have to have a life specialist? No. Does that mean you can't do property casualty anymore so that you can do IUL and annuity? No. but you need to create an insulative barrier, frankly, between the insurance and the financial services side, at least in the customer's mind, their perspective. We're not out to lie to them or anything like that, but something you might do, like when I was first getting in the business, first starting to get good at this, and I didn't have employees at the time, is I would just tell them, I'm like, hey, I'm the financial services guy. I focus on life insurance, cash value life insurance, annuities, and related financial services. And I just so happen to do property casualty as well, and we're pretty good at it, right? And so it just created this little bit of a insulation in their mind where it was like, okay, I'm not talking to an insurance agent about financial services. I'm talking to a financial services agent about insurance and financial services. It's not the end of the world. You don't have to. I know plenty of folks that sell life insurance without this. I'm just telling you, all the top producers I know who are in the multi-line side, this is something that they begin installing into their agency culture. Okay, so make note of that, I guess. And then you're going to want to get your whole agency involved in the opportunity creation process by adding questions to your fact-finding processes, cross-selling processes, and customer service. Very, very rarely are you going to have somebody call you up and say, hey, I want to buy an annuity. If you do this enough, they do. Did $500,000 in annuities last month because somebody called me up and was like, hey, I've got an old annuity maturing. I want to buy a new annuity. I heard you were the guy to help me out. What can you do for me? But that doesn't, in my whole career in 10 years, I've had that happen a couple times, a handful of times is all. They just don't do it that often. So it's not really ideal for you to build a business plan about that. We've got to talk to them about other things. Annuities and IULs, or cash value life insurance in general, all they are is solutions to problems. People don't care that it's an insurance policy. They don't care what company's name is on it. What they care about is when they needed it, did the check show up and did the check clear? When somebody passed away, did the check show up and did the check clear? Was it for enough money? When they didn't pass away, but they lived long enough and now they want to use that supplemental tax-free retirement you helped them set up, is it in place? Is it doing what you said it would do? And is it there for them to use? That's what they care about at the end of the day. Okay. And I'm going to show you here in a little bit how to begin installing some of these questions in your fact-finding, cross-selling, and customer service. And then you want to start running financial inventories. Pay close attention to that one. We're going to get more in depth on that. Okay, you use risk protection as the lead into your financial inventory. This is where your pivot starts. And it's going to foster all the IUL opportunity and annuity opportunity you could ever ask for. This is what we do. So when we go and work with property casualty agencies, what we do is we reach out to the client. We just say, hey, we partner with and we work with XYZ agency. And our job is to make sure that, you're spending hundreds and thousands of dollars a year on insurance. Our job is to make sure that if something were to happen, it actually covers it. We're going to need to ask some questions that may have been missed the first time around, but we want to make sure, even if you don't want to buy insurance, you at least know what's out there and you know when you can use it. Okay, when can you use your insurance? And so they'll usually say, yeah. Does everybody want to go through that with us? No, but you'd be surprised how many do. And you're going to be, I think you'll be not shocked, but pleasantly surprised at some of the information they give us access to when we come from this risk protection side to do a financial inventory. That financial inventory is going to help us find the money. So financial inventories, the biggest reason I found, and I've been coaching hundreds and thousands of agents for years at this point, in addition to running my own firm. And I will tell you this, the number one reason agents don't do a financial inventory or CSRs. That's right. If somebody calls in and my CSR picks up the phone and we don't have a recent financial inventory, I expect them to run one. My sales associates, I want to teach them how to do it so that they can do it and we don't have to come back after the fact. A financial inventory is such a wonderful tool. In fact, you'd be pretty hard pressed to tell me that you're a quality insurance agent. And this isn't, I'm not trying to speak ill of you. If you didn't know, you didn't know. Now you're going to know after this. You'd be pretty hard pressed to convince me that you're a quality insurance agent that really cares about providing the coverages your clients need if you're not running financial inventories. Why? how the hell are you going to make a recommendation about things that you know nothing about? You're only asking about the easy stuff, the home and the auto, or their business. There's a lot of other pieces in there. And their home and auto, they have 50, 100 coverage. You sell them 100, 300, and you're stoked because you just, cut them by $20 a month and doubled their coverage and the whole 9 yards, but you didn't ask these extra questions. And it turns out they're worth $10 million. And when the neighborhood kid runs across their lawn, trips and breaks their nose over the hose, and it just turns out that their neighbor kid is a child star in Hollywood or something, and now they lose all their income. Like your client's retirement, their livelihood, their everything is on the hook. Shouldn't they have had an umbrella to go on top of that 1 or 300,000 in homeowners liability? They probably should have, but you didn't know because you didn't ask. So my point is, now that you know, I hope you'll use this, and I hope you'll ask. Okay, it's less scary than you think, and you're going to make hundreds of thousands and millions more over the course of your career if you'll do it and do it right. So here's an example of our financial inventory, and it might look a little intimidating. This is page one. Okay, we run it as a 1.5 page piece. So we run this through our clients and we ask every single question. When you start skipping questions, that's where you start losing out on money. Okay, you're not finding opportunities. But we like to ask these things because it's not just finding the opportunity. It sets up the closing appointment. We're going to talk about that in just a second here. If I ask somebody, hey, do you have any 401ks or 401as? Do you know how many folks have a 401a? Not many anymore. But I throw 401a out because everybody's heard of 401k. They probably haven't heard of 401a. And now they're going to ask me, well, what's a 401a? I get to explain it to them just a little bit. It's just a little bit of a tweak on a very similar type plan, to be honest, but big changes on the back end. But now it immediately, like that question, remember, I sat down maybe as the insurance agent making my pivot to financial services. Now they're asking me about money. They're asking me about retirement. They're making me the expert because they didn't know, right? You have any 403Bs or 457s? Well, no. What are those? Well, these are plans for public employees, depending on if you're a municipal or state employee or maybe a teacher. Okay. For you to know these things, you're going to have to go do some homework. But I'm telling you, don't skip these questions. We're going to ask them, oh, you do have a 401k. What are you contributing monthly to that? I'm not going to skip that question. Why? Because if they tell me, well, I don't know, I'm putting in like 500 every paycheck. Okay, is your employer matching that? Well, no, my employer doesn't put any in. Okay, I just leave it alone. But I know I just got ammunition coming back because 401k plans that aren't matched are horrible. 401k plans that are matched are fantastic, in my opinion. Okay, but maybe they're only matched up to the first 500, so they're over contributing by 500. And if I ask that question, I just found $500 per month in potential contribution that could be redirected to help them have a more effective outcome. But if I didn't ask the question, I wouldn't have known, right? What's the current value of your account? Why do I want to know that? Because maybe we want to do something with it. Maybe they're over 59 and a half. They don't like it. And because they're over 59 and a half, we can do what's called an in-service distribution to an account that's protected from market downturn and positioned to take advantage of market upturn while providing statutory protections, creditor protections, and more. That's an annuity, a fixed indexed annuity in an IRA. You can do it for zero fees and zero penalties if they're over 59 and a half. So if they're over 59 and a half and I ask them current value of your account, I've got 250,000 in it. Okay, cool. What's your average performance like? Most of them don't know. A few of them will, but most of them don't know. Or if they do know, they know that it's been good the last couple of years. But if we go look at the last 10, it's not as sexy as the last couple of years might have looked, right? So now I can talk to them. If I could show you a way, Mrs. Jones, if I could show you a way where for $0.00, zero penalties, zero taxes, no consequence at all, you could shift that, take that money out of one pocket, in the pair of pants that you're wearing and put it in a different pocket with a different set of rules where it's now protected from economic downturn, positioned to take advantage of economic increase, and better secured from the greedy hands of the IRS. Wouldn't you at least want to know about it? And they're going to say, yeah. Okay. You're going to get these appointments every time, but you don't have that opportunity if you don't ask. Okay. I want to ask about all these things. I ask about other taxable investments, lazy money accounts. I want to ask about everything in general. I ask about real estate and inherited real estate separately because people just forget to mention those properties they inherited from ma and pa, right? They do. So we go through all of it. I want to ask about their life insurance. Is it term? Is it permanent? What kind of permanent? What's the death benefit? What's the monthly cost of that benefit? Why? Maybe they have a $100,000 term policy. It was a 10-year term. They're on year 9, so they only have 1 year left and they're paying $80 a month. And I can go run some quotes and holy cow, for a $100 a month, I can get you another $100,000 policy and it's locked in for another 10 years, or maybe it's an extra 20 a month, but I can get that for you for the next 10 years. If we wait until next year, it goes up to 180 a month. Do you want to just go ahead and lock in the next 10 years right now? Okay. Opportunities, tons of opportunities here. This is the second half of the page. We're going to ask them stuff that has nothing to do with insurance or finance. Do you rent? Do you own, but you're paying on a mortgage? And you'll have to forgive me. I know it's a little blurry. I just grabbed some screenshots because it was easier. But why do I want to know if they own and they're paying on a mortgage, or if they own and it's paid off? Because if they're paying on a mortgage, that just opened up a mortgage protection opportunity for me. If they own and it's paid off, well, equity is lazy money. Maybe through IULs and annuities, I can show them some interesting strategies where they can put that equity back to work in their best interest, right? I can figure out how much equity they have. I like asking, what's your mortgage interest rate? This is an interesting question. Like, let's say I've got somebody who they want IUL or they want something, but they can't afford it. And let's say they just bought a house when interest rates, were really crappy. They're still not great, but they've come down. And let's say they have an 11% interest rate. Well, shoot, I've got a good mortgage guy in my back pocket doing zero fee refinances. If you could go from, say, 11% to say 7% for zero fees, nothing out of pocket, what would that do? Well, if your home was worth $500,000, this is oversimplified math, but bear with me. If your home was worth $500,000 and we could get you 4% per year, that's $20,000 per year, give or take, on interest savings. I just increased their budget to contribute towards their financial future by $20,000 a year by first referring them to my mortgage guy. This is IUL City. This is Annuity City. And it's that monthly contribution. It's not always IUL. There's a lot of times I'm using annuity for that. Let's set up a Roth IRA and max fund it using a flex premium annuity. Okay. I want to know about their other debts. Maybe they don't have money to contribute to something because they have $100,000 in credit card debt and student loans and this and that and the other, and they're making $2,000 a month worth of payments on it, and they just feel underwater all the time. But I've got a really, really good debt settlement company. It's going to hit their credit a little bit, but would they rather save for their financial future and be healthy and fix their credit over the next couple of years, or a few years from now have knocked down a minimal amount of that debt? They probably still don't have great credit because they're letting the credit cards go too long and all these other things, right? But I can get them over to this debt settlement company, and this debt settlement company is going to help them settle their debts. And now instead of having to pay $2,000 a month on them, they're paying $800 a month on them. I just opened up their budget by $1,200. Am I going to take all that for contribution? No. You guys should do some other things too. But what if we start putting $500 a month away towards your financial future? Okay. There we go. We ask all these things. We want to know. If we don't know, how are we gonna help them? Easy legal plan. I would encourage all of you to reach out to my buddy Orion Parker with Legal Shield. I sell Legal Shield. I don't sell it. We just call it an easy legal plan. It's cheap, it's easy, retention's great, and it's renewals. My clients can't wait to pay for that one. The price never goes up on it. It's always there when they need it. Like I'm telling you, you'd be shocked how many of them want it. I think every property casualty agent should be doing that. And I don't even sell it, right? Legal Shield gives me you're an insurance agent first and foremost. So you're not part of the MLM. You're part of their professional services side, which means you get graded, accelerated commissions right off the bat and a whole bunch of other things. But I literally just, do you have an easy legal plan? Oh, you don't? I'll shoot you some information. Check it out. And if you think it makes sense, go ahead and sign up for it. You can sign up right there. I just shoot them the link to the website that Legal Shield gives me. I shoot them that link. If they sign up, I get residuals on that. Kind of cool. Anyways, all right, let's keep cruising. So now that you're running these financial inventories, okay? Now that you're running, and by the way, if you want that financial inventory worksheet, I'll give it to you for free. I will literally just email it to you, no strings attached. I'll give you my contact info at the end of this. Just reach out to me and I'll send it to you. So what's next is you need to learn how to recognize the opportunities, which is where you find the money. You've got to ask those questions first, but then you've got to learn to recognize those opportunities, like their interest rate on their mortgage was too high, or they're over 59 and a half. And so how do we recognize those opportunities? We got to start doing, okay? You cannot study your way to proficiency in this business. Now, there are some things in a minute here I'm going to tell you or give you some ideas on where to go. I think you should be doing some studying. I'm not saying don't study. I come in and study every day, and I have for years. I'm just saying don't sit in front of your books and computers 10 hours a day expecting to get good at this. You're going to have to get out and start doing it. Call it the school of hard knocks, call it whatever. I've got some suggestions on how to do it and guarantee you don't put somebody in a bad position because you don't know what you're doing, and guarantee you don't miss opportunities, okay? But you got to learn to find that money, and that just comes through experience. You need to pivot off that information with questions. Quality questions. I think Van Miller, VanMueller. Van's a dear friend of mine. And Van taught me, when it comes to asking quality questions, Van's the one that taught me. Okay. So if you saw they had money in an old IRA or an old 401k, if you'll use those questions, when did you decide to make the IRS the number one beneficiary in your retirement and your lifetime of hard work and sacrifice to save and invest? And they're going to be like, what? Well, yeah. When did you decide to make the IRS the number one beneficiary of your retirement? Why is the IRS the number one beneficiary of your retirement? Because you may have, if they are wealthy enough, they may have some estate tax issues tied to some of those things. Even if they don't, their beneficiaries are going to have taxable consequences. There may be an inheritance tax. There are so many taxable opportunities. And maybe Mr. and Mrs. Jones have 3 kids. Let's say they had $100,000 and 3 kids, and 40% of that is lost to taxes. That's $40,000. Now the kids get a split $60,000. They get $20,000 apiece. Was the IRS not the number one beneficiary on that plan? Sounds like it to me. What if I could show you a way, ... right? So quality questions are how you're going to start pulling those pivots. Never, ever sell your product at the fact-finding appointment, okay? You need to show evidence of preparation. So you're going to go through these financial inventories. You're going to start pulling out these opportunities. You're going to ask questions. Those questions are what's going to set up your closing. Okay. When I ask that question, your clients are like, well, how do I make changes? What I'm going to say is, I've got a few ideas, but I'm not sure that they're right for you, to be completely honest. If it's okay with you, I'd like to take this information back to my office. All this information is secure. You don't have to worry about that. But let me take this back to my office, maybe even with a couple statements or copies of statements. And if you'll give me a few days, I promise you nobody's going to work harder to put together some effective solutions for you. Let's get back together here in 2 or 3 days and go over some of those solutions. Is 2 o'clock or 3 o'clock on Wednesday better for you? Right? We move right on to that. They need to see evidence of preparation. If the minute you find that and they're like, well, what do I do? You're like, well, you cash it out and put it in an IUL, or, well, you could roll it to an annuity. And the second you do that, you just commoditized a service. I'm not going to say nobody pays for commodities. People don't pay as well for commodities, and they certainly don't purchase them as well as they'll purchase life insurance and annuities when they're provided as a service. Okay. As a service. So reschedule and go back over a couple days later. And then learn how to build these products for solutions. We're going to talk about some solutions here in a minute, and learn how to present them effectively, or joint work a few cases with someone else. If you'll go joint work 3, 5, 7 cases, yeah, you're going to give up some commission. You will. That's the cost of tuition. Okay. It's okay. We've all of us that are good at it have done that. We have, I promise you. I promise you. Okay. But go joint work. And now you're not going to screw it up for the client. You're going to ask all the right questions, get all that stuff there, and then go joint work it, because that expert you're bringing in is going to help you pull those opportunities out of your financial inventory. They're going to help you build quality, solution driven conversations. And then they're going to help you deliver those to the client, build your policies right, illustrate it right, go through the application process effectively. All of it. It's worth it. It's worth it. Actually, let me go back just a little bit. I had one other thing I wanted to hit on. I don't think I put this in here, but don't sell with illustrations. Does that mean don't run illustrations? No. Does that mean don't disclose? No. Of course, we run illustrations. We disclose. Clients need to sign those illustrations. But I go into my appointments with proposals or summaries. If it's a simple term policy, it's a one-page summary. If it's a whole financial plan, it may be 3 or 4 pages. But how long is the average illustration on like an IUL? 30, 50, 80 pages, some of these things. Okay. That's where your clients are getting lost and bogged down. Go in with a summary, and the information you put on there, the numbers you put on there, just make it make sense, and completely back up, or it is backed up entirely by the illustration. Have the illustration handy. I don't ever print them. I have the PDF there and available. We can pull it up on my iPad or my phone and go over it if need be. I can show them exactly where I got that number and that timeline. And if they have any additional questions, we can always reference back to that. But remember something, IULs and annuities, you don't sell IULs and annuities well by everyone in the room knowing you're the smartest person in the room. That's just not the truth. Am I saying don't go be the smartest person in the room? No, I want you to study. I want you to know these things. You sell, the selling part of IULs and annuities is done best when you are the best communicator, when you can take all these really smart, incredible things that you've now found and communicate them effectively to someone else so that they get it. You got to give it to them in a language they understand. And that's not, I'm not just talking English or Spanish or French. I'm talking about everything else in between. Okay. All right. So I want to give you some top conversations I've seen P&C clients want to have. And we work, like, I think right now in our lead database, we're north of 500,000 leads, 500,000 P&C clients. We're not even working all of them. We got too much. We'll get to them. I got to continue to grow my team. But my point in telling you this is we're working tons, hundreds and thousands of these conversations every year. Okay. These are the ones folks want to talk about the most from what we've found. Are there some other things you can talk to people about? Absolutely. But these are the ones that we find are grabbing traction. So on the life insurance side, I know it's term, but I'm just telling you, the easiest money you'll ever make in your life and some of the best help you'll provide for your clients is cross-selling term for mortgage protection, accidental death and dismemberment upgrades, and income protection. If you got questions about any of this stuff, hit me up. Like we'll have some stuff here at the end in just a second, okay? The next one is tax-free retirement and or infinite banking concept. Okay, I don't really love infinite banking concept. I like the actual concept. I do. I don't like what it's become as far as a narrative socially. It's become kind of spammy and scammy. Thank you, TikTok, I guess. But the concept actually works really well, and I like it for that. But I've rebranded it. We don't have infinite banking conversations or concept conversations in my firm. We do what's called wealth leverage creator conversations. We create wealth with them. Okay. So those are two big conversations folks like to have about life insurance. Asset protection or assets and protection for children. If you're under 18, it's pretty dang difficult to find a term policy. They can't have it. They can't have it. They can have a permanent policy. And IUL tends to be a good way to go. Why? For death benefit and accelerated benefit. I know folks are like, well, that's so morbid. It's morbid until your client calls you and their 6-year-old was just diagnosed with terminal leukemia. It's morbid until your own child, who was born premature, has major issues years later, but you got that policy, right? Now it's not so morbid, is it? The morbid thing is to not bring it up, okay? So for protection, absolutely. Life insurance and accelerated benefits. Emphasis on accelerated benefits. But then building an asset. I'm not as sold on using cash value life insurance for education plans. Can you do it? Yeah. Are there better things to do? Unequivocally, yes. Um, and we have put that on paper 1,000 times over. But is it a bad thing to do? No. My children have cash value policies for building assets. The protection's there, but they're building assets, just not for education. Okay. By the time they're 18, it's just not sexy enough for me to want to do that. So I do other things for that point in their life. We're doing this for later in life. Later in life, we've only put in a little bit of money, and these things have tens and hundreds of thousands of dollars in them. But they just didn't have enough time to cook by age 18. So I've done a lot of training on that. I won't get too much in the weeds on it, but yeah, build them an asset and just make sure that asset makes sense for your client. So, and then finally, wealth transfer and generational wealth development. Okay. You would be surprised how many times we do a financial inventory, find a client, Mr. and Mrs. Jones, who has, $500,000 in the bank account or an old CD that's maturing or something like that. And it's like, okay, yeah, we could do annuities. What's your goal for that money? And they're like, well, we don't need it. We need emergency access to it in case something were to happen. But our plan is to pass it on to our grandchildren. Okay. Well, when did you decide to make the IRS the primary beneficiary of that transaction? Like, what? Well, didn't you know? And we'll go through. But did you realize if you took that money out of your bank account pocket and put it in a different pocket, same pair of pants, different pocket, okay? We have a different set of rules. And now when you pass that $500,000, not only passes tax-free, but it also passes leveraged, meaning they're not just going to get $500,000, they're going to get 700, 800, a million. How cool is that? Is that something you want to know more about? Okay. You'd be surprised how many of those policies we do. And there's a lot of other examples of generational wealth development and wealth transfer, but I digress. On the annuity side, top conversations is maturing CD alternatives. Mr. and Mrs. Jones, you said you had a CD. When's your CD maturing? Did you realize through a multi-year guarantee annuity, you can get, right now you can get 5.5 at the bank in a CD on a 2-year note. Did you know you can get 5.5, 5.6 for 5 years guaranteed through an annuity? Pretty sinking cool, right? So CD alternatives, rate integrity. You've got money in the bank account, but you're worried about inflation right now. You had $100,000 in the bank, and let's say we're inflating. For a minute, we were inflating at 11%, 12%. We're back under that now. Let's just say 10%. 10%, right? If we're inflating at 10%, you had $100,000 in the bank. How much purchasing power would that $100,000 have in 5 years? It would have about $50,000 in purchasing power if we continued to inflate at 10% per year. That's it. That's crazy. Well, we've got some annuities and they might do 10%, they might do 5%, but they're certainly going to do 5%. And if we can do 5%, even if we inflate it at that same 10%, how much purchasing power does your 100,000 still have? Still has $75,000. Are you prepared to lose $25,000 worth of purchasing power over the next 5 years? Or are you ready to take action and stop the bleeding? Okay. Guarantee to not outlive your income, even if you outlive your money. Inflation guarding your retirement. Long-term care leverage. This is a big one. There are 2 types of long-term care leverage I want to hit on real quick. The first is inside typically fixed indexed annuities. It's called an income doubler. For $0.00. There are a couple companies out there that are going to give them an option on their annuity. Okay. It's out there earning. It's doing all this stuff. It has a lifetime income rider on it. So even if they outlive their money, they don't outlive their income. It's called an income doubler. If they go into long-term care, the company's going to double their monthly payment for up to 5 years. And if they're still living at that point, then it reverts back to the standard payment. How cool is that? Even if they were out of money, it keeps paying. The second is a guaranteed 2 to 3x benefit for long-term care. So we've had plenty of clients. So I've got $100,000 sitting there. Well, what's it for? Well, in case we need to go into long-term care. Did you realize for $0.00 out of pocket, All we have to do is submit a little bit of paperwork. You don't have to pee in a cup or anything like that. It's not a life insurance policy. They're going to call you and ask you about your health, and that's it. It's a phone interview only. Based on that interview, they're going to give you a 2x or 3x benefit. Now, your $100,000 is in savings right now. It's growing at 0.1% per year, which is nothing. That's nothing. You're not going to have any growth in this annuity, Mr. and Mrs. Jones, but you're going to get a guaranteed $200,000 or $300,000 in long-term care leverage. Would that help you feel more secure about all your other investments, savings, and everything else you have going on, being left alone as you work through your long-term care years? And they say yes. And so we do a long-term care annuity. These are ones, that one specifically, you're going to need that long-term care CE credit for, okay? And then finally, statutory protections that are going to enhance Social Security and Medicare benefits while mitigating risks in retirement, okay? Why is that? Because annuities have statutory protections that help secure and insulate them from creditors and predators, which is pretty cool. And then annuity money in surrender period with some rules around. We're not going to get too deep in the rules. We have look back rules for Medicare and different things. Then you've got your IRMA compliant annuities. Again, we won't get too down the rabbit hole yet, but did you know you can help your clients increase their Social Security benefit because they're decreasing their taxable Social Security income through annuities, which is pretty stinking cool. And the same thing for Medicare. You can increase some of their Medicare subsidies because we're decreasing their liquid assets. If they didn't need it, they didn't want it right now, they weren't gonna cash it out and buy a boat. They were gonna use it to supplement their income. An annuity can be a really, really good tool for that and help protect it from some of those other pieces that are going to minimize some of their other benefits. So, all right, that's a lot of what I have right now. Again, we didn't get too deep into products or anything. If you'll scan that just takes you to my link tree, and you can get all my social media stuff there. We have a program. Kenzie said I could throw a shameless plug, so I'm going to. And then we'll open up the floor, I swear, so don't leave yet. But today only, we did a thing. That thing is now done. I think we ended it on the 20th, but we're going to do it today only for people that were on this call. We have a mastermind for life insurance agents and annuity agents to help you sell more life and annuities. If you want to know more about it, just shoot me a message, hit me up, and I'll tell you all about it. We have 3 levels, Revel, Rush, and Rise. If you jump in before the end of the day today, at those specific levels, if Revel, I'll give you one-on-one with me. Typically, I charge $750 an hour for that. If you jump into Rush, we'll do bi-weekly one-on-ones for 90 days. Jump into Rise. And again, I can shoot you links or tell you everything about it, but yeah, you can check all that out. So I won't say any more about it. I don't want to be too spammy. I appreciate you all giving me the floor for a second. Questions. Kenzie, did you have anything you wanted to go through first, or you want to just open it up?
Yeah, I think just open it up for questions, because I'm sure people have some, as far as if you have never sold an IUL or an annuity, if you are just now getting into life insurance and have been strictly, primarily personal lines up until now. Feel free to ask any questions. There's no dumb question. There's no too advanced question. Just unmute yourself and ask away, or you can type it in the chat.
I got a question, Carson.
What's up, Kevin?
In terms of I thought that was really smart. I think you've mentioned it in the past, but like where you don't bring an illustration to the sales call, and you have more of a concise, selective, maybe smaller packet of information. Is that just something you just created on your own? Or are you selectively picking out the relevant material from the actual base illustration to present to the client?
So both. Right. So like on a simple term solution, I always go with more than one option. If they're like, hey, I want a 20-year term for 500,000, I take 20-year term for 500 and 20-year term for $1 million. And maybe even run them a 30-year term quote as well. So I always put together a table. I have this one pager, and the one pager has some additional information on it about how my policies have accelerated benefits, and so I'll just take them that instead of printing out this 4-page thing for a term policy. On like an IUL, typically the proposal form I used to use a 1-pager. In fact, the first million, it was $1.5 million single premium IUL I did. I sold that off of a 1-pager. That was my summary. Illustration was there to back it up if we needed to. And that was back in the days you couldn't even e-sign. So the client literally held the illustration in his hand, signed it. We went through it page by page. But by the time we went through it, he'd already bought.
Yeah.
At that point, it's just a formality. It's not part of the decision-making process to go through that paperwork. Okay.
Yeah.
So yeah, the one I use now, I created it. It's 4 pages. The front page is literally just a cover page. There's 1 page of just terms and this and that and the other that's just free value for them to have. Third page is usually my proposal. The things I'm showing them was literally putting one together earlier. It has the client's names on it. Otherwise, I'd screen share and show you. Actually, if you guys, can you give me 1 second? If it doesn't have it on that page, I will. Where'd it go? Yeah, I'll show you if you want to see. So this is page 3. Da 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 da. Great.
Make sure to share your screen again.
Yes.
Yeah, because I did a IUL quote with Corbridge and it's like 81 pages.
There you go. Yeah. So this is all I'm showing them some term stuff. They wanted to do some whole life, and they are legal residents, but they're not U.S. citizens, and which really mitigates, not mitigates, minimizes their whole life options. So we had to go with a surety, which isn't my favorite whole life option, but it's there. I'm all about max funding life insurance, okay? And they told me $250,000 death benefit. So this shows them, I need to get some other numbers in here. This shows them what happens if they max fund it, but it's expensive. On that same policy, illustrated at 5.05% is all. Even if they target funded it, they're still going to have a better outcome. So is a rare circumstance where I might sell a target funded IUL. At 5.05, I'm pretty stinking confident this policy is going to outperform that illustration. But even at 5.05, it costs less than a whole life policy and performs better than a whole life policy, plus contains all their accelerated benefits. And so that's what I'm showing them. And all these numbers, this is directly off the illustration.
Yeah.
Stuff from current pages. Okay. This is just stuff from current, from illustrations. That's all it is. Okay. So that's what I take in, and I have the illustration there in PDF format, electronic format, to back it up. So when I'm meeting with them, if they're like, "Well, can I see that on paper?" Absolutely, I would love to show you. Let me switch my screen share, and I'll go point that out to you. And usually, when I can back up my data like that and point it out to them, they see me flicking through 80 pages. They don't want to go through all 80 pages right now.
Yeah,
Make them. Don't make them. So.
Carson, Dan asked about your fact finder. He asked if you had one that you could share.
Yeah, so that one that I shared with y'all right there, that financial inventory, if you'll reach out to me, Facebook message, if my link tree, if you grab that QR code. So Facebook, LinkedIn, Instagram, email me, whatever. Just hit me up and ask me for it, and I'll just email it over to you. It's just a blank PDF that you can go through, and you can fancy it up if you want to. We've never found the need to. So.
Yeah, I put Carson's email address in the chat, as well as some of the other websites he was referring to throughout the call. So those are in the chat if you need those handy. What other questions do we have? Y'all are being shy today. Desmond, did you have something? Or Demond, I'm sorry. Did you have a question?
I'm sorry. I'm just listening right now. I'm totally new to this, so just listening.
I'm glad you joined.
Yeah,
Lance,
I'm glad to be here. I learned a lot.
good. Carson, Lance asked, are
Yeah,
you automating the? Yeah, can we see that?
Lance, can you help me understand your question just a little bit? I don't know if you're in a place you can unmute yourself, or if you're at Chuck E. Cheese's, or I don't know.
Can you hear me, brother?
Yeah.
I was just curious if you had something that you was automating to put all that information in to show the customer, or are you actually just manually typing in all that data on the last screen that you just shared?
So on that one, we have both. We started automating it and then kind of stopped because we're actually going to go through. Now that these events we've been doing are over, we're going to go through and have a revamped. I created that one in 2018, and I've been selling millions of dollars a year in life insurance. I mean, it's stupid off of that crappy thing. But right now, I am manually filling it in. Again, we went down the road of automating it, but now we're scrapping that because we're creating a whole new one again. So once we create that new one, what that automation will look like is basically web forms that ask a question. Just go in and punch in the numbers, and it'll automatically insert it into a proposal that looks better. Well, we're having it professionally done, not just me messing around on Microsoft Word, So I'm excited for that, but I'm telling you, I made a lot of money on that. I've sold millions of dollars in term insurance off of a one pager with my logo at the top. So don't feel like you got to get too fancy with it, but it can be tedious. I'll also tell you this though, Lance, like, why do I not mind doing that? Because for those folks right there, like, I'm going to make $3,000, $5,000, $6,000 between term and cash value policies for them. I don't mind spending 30 minutes putting all that information in. It's not that bad. So that's, yeah.
Makes sense.
Cool. Anything else? Anyone?
Yeah, y'all feel free to ask away. That's what this is for. We've reserved the last 10 minutes for y'all to ask questions. So if you have them, now's your chance.
If you don't want to, that's okay. I've got a gal I got to go call about retirement. I screwed up scheduling and scheduled her for right when this was supposed to start. So if you don't want to, I'll go get my butt back to work. But if you do, I'm happy to be here and share if I can.
Okay, I found it. I have a question.
Yeah.
Yeah, I have a friend who is very interested in IUL, and I'm a life producer, and he wanted to go through me. So, what would you recommend, or what advice would you give somebody brand new to IULs and annuities? What would be my first way of helping him?
Yeah. My advice would be treat everybody the same for two reasons. Number one, he came to you saying, I want IUL. That doesn't happen very often in the large scope of things. Treat them the same as if somebody didn't. You're not coming from a product standpoint. You're coming from a problem solution. So I would ask him, well, why do you want IUL? What makes you think you're a good? There might be 100 other things out there that might be the right fit. Explain to me what makes IUL a good fit for you in your mind. And he's going to regurgitate a bunch of stuff. Well, I like this, I like that, and you're going to write it all down. And that's the ammunition you need. First of all, make sure IUL can legitimately and ethically solve the problems he thinks it will. But if it can, now you have all the, not just the ideas or concepts he's wanting it for, you have the literal tonality, the verbiage, the syntax to communicate it effectively back. Remember we talked about the best sales folks are, when it comes to this stuff, are the good communicators. That's where you get your communication keys from. So I would do that. And then the other reason I say treat everybody the same is this: do a financial inventory. He may have budget that he didn't realize he has. He may not have budget he didn't realize that he didn't have. So go through the whole thing. Just because he's a friend, that's a mistake I made, frankly, when I was early and young in business. I didn't have a lot of friends and family hit me up because I'm kind of a butthead, and they all know it. And it took them a while to come around. At this point, I do life insurance and financial services for most of my friends and family, but in the beginning, I didn't. But the few I did, I skipped the process. It was like, you're my friend, you're my family member. I don't need to. What a turnout! If anything, I should be treating them better. So I'd be
Yeah.
like, oh man, you hit me up for IUL. Let me tell you about it now. No, I need to gather facts and then show evidence of preparation. Because when it comes to IULs and annuities, it's not just the product that makes it effective or your cells that make it effective. It's the client being bought into that policy throughout the duration of that policy. What good did it do them to buy it now and lose confidence a year or two from now? They lose money, they lose time, they lose these things. So I need to make sure they are all in for the long haul. And the only way to do that is to treat everybody the same, be an absolute professional. I don't know. Does that help at all?
It does. I have a follow-up question. What carrier would you suggest to use?
I don't know, actually. So first of all, if you're captive, use your captive carrier. Not out to get
No, I'm not
anybody
captive.
fired. If you're independent, it depends. Different carriers, there's a lot of variables that go into these things. So like for IUL, you have premium bands, health bands, death benefit bands, age bands. There are so many different things that like you could take one product and it's absolutely great for this, but it sucks for that because the person was 1 year too old. They were over a rating band, and now the carrier charges more for insurance in that band, which takes away from performance. So I really do not know, but there are a few carriers I prefer
Okay,
for
yeah.
IUL.
Tell me something, one of them that you would use.
I really like North American. They're probably 70% of my apps right now for IUL is North American. I like Allianz quite a bit. And I like Columbus quite a bit right now, actually.
Yeah, the only one I've heard of is North American, but okay.
So I like North American and I like Allianz. I know a lot of folks are going to be like F&G or Foresters or not bad policies, just not what I prefer. So
Okay. Well, you gave me a start, man. I appreciate it. And this was good today. Great training.
absolutely. I appreciate the opportunity to share. Thanks for listening to me.
Yeah.
Here's
Anyone?
another question. Do you asking if you generate leads from only your current customers, or do you also generate leads other ways? And if so, what do you use?
Yeah, so we do a lot for lead generation. It's actually part of that first level of the mastermind that we teach is how to get in front of more opportunities. So we get in front of a lot by partnering with other P&C firms. We do a lot of networking. I get a lot of stuff through organic social media. That is a long road, I'm going to tell you, but I probably do $500,000 a year in commissions that comes in off of social media from people seeing what I post, and they hit me up and they're like, "Hey, can you help me with?" Um, so we're doing a lot of that. We do like, so I have a whole team. I've got members of my team in BNI networking because it's good for them. I don't like BNI myself, and it's not because BNI is bad. It's just because again, I'm a bit of a butthead, and it's just not the most effective place for me to be. So I do some other things. We don't really run ads on Facebook or Google. We don't buy leads really. Most of what we do is organic. Um, but yeah, that's what we do. We partner with other agencies. We do a lot of networking. We get out in the community and talk to folks. We do events. Team did an event 2 Saturdays ago, and it was really impromptu. We like totally screwed it up. Didn't have a professional looking table at all, and we gave away $100 gift card for Valentine's. Was all we did. But because my team was willing to run that event the right way, don't sit behind the booth, get up in front, go meet people. And we pulled over 250 leads, and over 40 of those have already booked an appointment for retirement,
Wow,
retirement consultation. So,
that's awesome. Yeah, giveaways have become huge because it's just such a great way to organically reach some hot leads.
well, and here's the cool part of the back end on that, Kenzie. Like, I'm going to give you all the secret sauce on this. We gave away $100 gift card for a Valentine's dinner, right, at a popular local restaurant. After the fact, I had my guy went back to his BNI group and was like, "Hey, who needs more traffic and is willing to give me something?" He's got a chiropractor who's great but newer in business and trying to attract clientele, who's willing to give away one free adjustment or laser treatment to as many people as we want, like up to 200-300 a month. He's just trying to take
Wow.
massive action. So we're like, okay, cool. So he cut us, like 100, 150 gift cards. And so now I've got my team calling all the people that didn't win. And guess what we're saying? Hey, congrats, you're a winner. You didn't get the dinner, but we got you this other thing, free chiropractic adjustment. You don't have to pay for it. And everybody loves a good rack and crack, but you got to run by the office and pick up this gift card because it's not
I
what
love that. Doubling down. That's awesome.
we paid $0 for it. We're helping another business, but they come in and now we get to engage them. And we're probably rocking about 30%. 1 out of 3 that comes in, we're getting an appointment set with.
That's awesome.
So
She asked, what do you say show to people to get them to enter your giveaway?
to get them to enter the giveaway, it was literally just, hey, we're a firm here in town. We focus on retirement, wealth solutions, annuities, and life insurance. We're giving $100 out, no obligations or anything, but you do have to put your name and phone number down, and we are going to call you. You can tell us to piss off. We can have a conversation, whatever you want. But that's the stipulation, and they laugh about it. We're in Southeast Idaho, so we got some folks here that appreciate a good piss off, and yeah, they drop their name in. Like, who doesn't
That's
want a
awesome.
$300 dinner?
Well, we're a little bit over time, but I want to thank you, Carson, so much for your time and your expertise. I have personally been a part of Rev, guys, and let me just say I can't say enough great things about his program. His website is Rev Agency Syndicate, REV as in Victor, agencysyndicate.com. And you can get more information and kind of pick Carson's brain a little more if you join one of his programs. And I just thank you all so much for joining, and feel free to email Carson with any additional questions that you have.
Yeah, thank you.
Thanks again, Carson. Absolutely. We'll do it again soon. I hope you guys have a great rest of your day.
See y'all.